Ah,
All right, hi folks. Welcome to today's GRadulting Workshop Series. Today we will answer the question, how do I prepare my taxes? This session is specifically for domestic students. Earlier today we did one for international students, and we hope it's helpful to you. This workshop is co-hosted by the Graduate Student Legal Aid Office and the Graduate School. My name is Debbie McCutsky, and I'm the coordinator for services and programs for Graduate Student Legal Aid, and I use she, her pronouns. In addition to workshops like this one today, Grad Legal Aid provides free virtual legal services to UMD graduate students. Just to cover it really quickly, we do legal consultations, legal immigration consultations, advocacy consultations, and notary services. So take a look at our website. We'll post it in the chat so you could see how to schedule an appointment and learn more about what we do. So here is the groundwork for our workshop today. We will share the PowerPoint presentation and the recording after the workshop. It'll be sent by email to all the registrants. We will take questions at the end of the workshop. That will allow our speaker to cover everything, because in the course of the presentation, he may answer your questions. So if you can, please hold your questions for the end. If you have a question about something that he is talking about, go ahead and put that in the chat and we'll share that with him. Near the end of the workshop, we will post a link to our 6-second survey, and I need 6 seconds. So please take the time to share your feedback. We want to make sure we're doing a good job. So it is my pleasure to introduce someone who has given so much, volunteered so much of his time and effort to going above and beyond and assisting students at the University of Maryland. Our speaker today is Professor Sam Handwerger. Sam is a CPA and a full-time lecturer at UMD's Smith School of Business in the accounting department. He is also a University of Maryland undergrad accounting alumnus. Woo! He has a master's in taxation from the University of Baltimore, and he has his own firm that he has a few partners in: Handberger, Cardino, Funkhauser, and Lerman. It's notable that in 1996, he was awarded the Governor's Volunteer of the Year Award in the state of Maryland for financial and management advisement to nonprofit organizations. He continues that work today with TurpTax. He serves as its advisor, and I will let Sam tell you more about how TurpTax can help you. We are so lucky to have Professor Handberger with us today. If we were here, I would clap and cheer for him. Since we're not together, I will just turn the mic over to you, Sam. Thanks so much for coming and joining us today.
all right. Thank you very much. That introduction was very nice. I appreciate it. It's my pleasure to return to the University of Maryland and revisit the scene of the crime that I left when I finished. I didn't graduate. They kicked me out. That's how they got. They said, if we gave you a degree, would you leave? I said, sure. I said, here it is. Goodbye. See you later. All right. So I do love the school. I love Maryland. I love the college campus, and I'm happy to be doing this today for our fellow students. Okay, so let's do the following. Since we have a smallish crowd, which is not saying anything negative, it's just it gives us the opportunity by using those little buttons on the Zoom. Let's, by show of hands, how many of you are undergrad students right now? How many undergraduate students we have? Just do your clap hand or raise hand or something like that, or show your screen if you dare. You know, undergrad students, raise your hand. All right, how many are grad students? Let's try it that way. Oh, okay, very good. So that gives me an idea what kind of audience I have here, a smart audience. not to take anything away from undergrads, but certainly. How many people are already doing a doing a TA or a GA at the university? Let's do it that way. Let's see how many people we have doing that. Okay, quite a few. All right, that's excellent. That's really excellent. Very good. All right, one more question for the road with the hands, so you can put hands down for a sec, and we'll do one more. How many people are actually receiving scholarship, fellowship, grants, or any type of tuition assistance? Not loans, but tuition assistance. Okay. All right, good. That gives me also good to know. All right, thank you very much. Let's get started with a little bit of a share screen for a while. Talk about some generalities when it comes to taxation. Oh, I know why. Let's do one more question. Hands down, let's do one more question. How many people have ever prepared a tax return for yourselves before? How many people have ever done that before? Oh, good. Okay, so about half. All right, that's very good. That means that you are, those of you who raise your hand are at least in tax compliance, which means you're at least doing what the law requires you to do. And that's a lot of what we're here today to discuss tax law as it applies to you as students. So let's get a little roll and do a little bit of background before we get too far into it. Let's just talk about taxation for US residents. And that's what you are. You're either a citizen or you're a resident because you're here and you're not under some type of international student visa. That's who you are. So when that's your situation, what you're looking at is you're looking at paying tax on your income. And that income is from wherever you have income, whether you're a TA or a GA, whether you're getting a scholarship or not getting a scholarship, whether you have interest in a bank account or dividends in a stock that you own. If you work in the summer as an intern and they pay you, that's income. And if you volunteer someplace and like me and you don't get paid for it, that's not income. But when you do have income, that's where you pay tax. And the tax that you pay is based on rates that are graduated, which means you pay more percentage-wise if you go up the ladder and make a lot of money, and you pay a little bit less if you're down near the bottom of the ladder. So that helps you knowing that you're not going to pay too much tax if you're just starting out. In the tax formula, we have also, besides the income, we also have what we call deductions. Deductions, in tax class, we play the yay boo game. The yay boo game says, is it good to lower your taxes? That's a yay. If it's not good because it doesn't lower your taxes, we call it a boo. So when it comes to income, we would say boo, because it's going to increase your taxes. And when it comes to deductions, we would say yay, because it could reduce your taxes. So deductions are good. They're good to pay attention to. In the formula, after we do this, we sort of come to, this is a simple example of the formula, we sort of come to what we call net taxable income, net taxable income. And that's where we apply the tax rate to. So once you get to this net taxable income, we apply whatever percentage applies to you, we call it the rate, and that's how we determine how much tax you pay. One last thing for residents to know about in the tax formula, because it applies to you, is after we come back with the tax, let's do it this way. This will yield the rate times the taxable income will give you the tax that you owe or that you're supposed to pay. That will give you the tax. If we take that over here and continue the formula, you then could have, in addition to the deductions that you already took, you could have what we call tax credits. Tax credits. Tax credits reduce the tax dollar for dollar. So if you have a $1 tax credit and you owe $1 tax, you wind up paying, I bet you can't figure this one out, 0. So when we ask the question, is a tax credit a yay or a boo? It's definitely a yay. And is it better than deductions? And that gives it a double yay, because the tax credits are better than deductions since they've reduced tax dollar for dollar. In the formula over here, although deductions are good, they only reduce the net taxable income. They only reduce the net taxable income. Hence, they're only worth whatever percentage rate. They only save you what the percentage rate of your tax is. Is that a lot to digest in a couple of seconds here? Yes. The main thing you should get out of it is when you hear the word deduction, that's a yay. It reduces tax. When you hear the word tax credits, that's a double yay because it reduces tax even more. All right, having said that, let's move forward. When it comes to filing your tax returns and figuring out what your story is, you have 4 steps that you need to take. First, learn your dependency status. This is going to be a little bit of a stretch today. We're going to learn some new words, and it's a little complex, but that's the first step. Then get your tax forms together. So first you got your dependency status, then you got to get your tax forms. Then you got to know if you have any credits. Why? Because it's yay, yay. It's the double yay. So make sure you don't miss any tax credits. Claim them if you can. Now, you may not have any. That's the way it goes. It's by law, but don't forget those. And some of the credits that you might not have, but you can take tax deductions for, which is not as good as a credit, could be higher education tax deductions. You might get that. It's a single yay, so we're still not doing too bad. And then file your tax return. So the simple steps are learn your dependency status. So before you start your tax return, you know what that is. Get all your tax forms together, figure out whether you might have any credits or have any deductions, and then go get your taxes filed or prepare them yourself. Let's talk about dependency status for a minute. Dependency status is, despite what you think, you say to yourself, well, I'm taking care of everything I need to take care of. I might be in college, but I'm borrowing the money for tuition, or I'm getting a scholarship, or I'm working for it. But despite what you think, you might think you're independent of your parents, but for tax purposes, you are still a dependent. If you're a student and your parents are claiming you as a dependent, then you aren't eligible to claim deductions or credits for yourself. Playing the game, that's a boo. But the yay might be your parents claim it and they save taxes, so it's okay. Maybe they're saving taxes. You want to have a conversation with your parents when it comes to your tax return to see if they're claiming you as a dependent, are they getting the full benefit of the tax deductions, the tax credit, compared to what it might mean for you? Maybe it's better for them, maybe it's better for you. It all depends on the facts and circumstances. There's no magic formula to this. It all depends. If your parents, although generally speaking, if your parents' income is very high, hopefully, then they probably have less use of deductions and credits when it comes to school than you would be able to make if you're making any kind of taxable money. So it may be that's why the conversation with your parents to find out what they're doing and how it compares to your tax situation. And that might be a tax conversation with the family CPA as well. Okay, so this sort of sums it up, but it puts the bottom line on it. What we're saying is you can't claim any credits or deductions if your parents are already claiming you on their return. All right, just the facts of life. Who is better off claiming you? That's what you're going to have to discuss. If you have very little income, chances are it's much better for your parents to claim you than yourself. Tax forms. What are the tax forms you need to file your return? Well, you'll need what's called W-2, and this really should be 2020. The IRS, when I went to copy the form, the irs.gov, they're already printing the 2021 forms, but for you right now, it's the 2020 return that you're looking at, the 2020 W-2. And as you can probably see immediately, it states what it's for. It's a wage and tax statement. It's telling you what your employer, if you were employed by University of Maryland or anybody else, what your employer has paid you in income and a couple other things. Let's take a look and see what it's telling you. First of all, in box 1 right there, it's going to tell you how much of your wages were paid. What was your salary? What was your hourly? What did it total up to for the year? Then it'll tell you whether they withheld tax. Oh, that's an interesting idea. They withheld tax. They took from your pay a certain amount and prepaid your income tax for 2020. Okay, that's good to know, because that number, that X, maybe is higher than you actually need to pay. So you want to file your return in order to say, oh boy, guess what? They withheld more than I actually need. Suppose X is greater than your real tax when you prepare your return, that will equal refund. And that is in the yay boo game. Yes, I hear you. I can hear you even with your mics off. You're saying yay. And that's right. So that's part of the information that's important. The next box is 3 and 5 will depend on who employed you and for what reason. If you were a GA or TA, these should be 0, because you're exempt from that when you work for the school as a GA or TA. That's the only time you're going to see that exemption. All other jobs, you're going to find numbers here as well. These numbers you can't get back. These are not refundable. These are not refundable at all. So you just have to, I can use this expression with my fellow students, you have to suck it up. You have to just, you just have to figure that's part of the price of being a US resident, US citizen. These dollars, I'm not going to go through the whole situation with you about what Social Security is all about, but that's what you see. That's box 3 and 5 is Social Security and Medicare. You can make an appointment with me to have a discussion about it if you haven't been in any of my classes yet, but these dollars go to me when I collect Social Security. That's where they're going to go. That's a different story. Main thing is you're getting good information from the form. That's what I want to clear up. All right. Finally, you will get how much has been paid to you in the state, and it'll tell you which state. It'll tell you whether it's the state of Maryland, state of Virginia, Washington, D.C., wherever you worked, and they'll tell you how much was paid for taxes. And you do the same thing with the state. You go file the state tax return, and if these two X's here are greater than your actual tax to the state, that will equal another refund. And that's one of the reasons why you want to be encouraged to file your tax return, not only because you have to, but because you might be getting money back. Here's another form called 1099. It's a 1099 series you see down there. 1099s report other kinds of income that you might have. The payor is responsible for these forms, by the way. The employer prepares the W-2. You don't do that. The 1099, the payer is responsible for that. You don't do it. You just get it. And it tells you if you received any of the kind of income seen on here, rents, royalties, and if there's any federal tax withheld on that, et cetera, et cetera. Chances are most of you won't get this, and that's okay. But there is a good chance that many of you will get this if you've done any internships. You'll get what's called a Form 1099 NEC, which stands for from the payor, stands for paying you not as an employee, hence NEC, non-employee compensation. They paid you not as an employee, and I can hear you saying the words, they paid me as a consultant. Or another way to call that is they paid you as an independent contractor. This presents our first tax planning issue, and I'm going to explain this. If they pay you as an independent contractor or consultant, what they're going to do on this form is they're simply going to put down the total amount they paid you, no tax necessarily withheld, but maybe. But the main thing that's missing is look at some of the boxes, and what's missing is from the W-2, what's missing is this, the Social Security, Medicare. That's missing from the 1099 NEC. Why? Because they're not required to withhold that tax from you. They're also not required to pay the employer tax of Social Security. They're not required to pay the employer side because if you didn't know this, listen to this information. The employers match your Social Security tax. So one more time on that W-2, if you look at the numbers that show up on your W-2, if you have numbers there, those taxes paid are also paid by your employer. It doesn't come out of your salary, doesn't come out of your wages. The employer pays it. That's called the payroll tax.
Sam, there's
Yes.
a note in the chat. It says, did we receive these forms already? Oh, excuse me. Are these forms already filled out by our employers, or do we fill them out ourselves?
These are filled out by your employer. The payor fills all these forms out. I'll let you know when it's your turn to fill out a form. The employer fills this out. The payors fill out all the forms we're talking about so far. This was due January 31st. It was due to have been sent to you by January 31st. If you haven't received it, you want to check with your employer, where is my W-2? The 1099s we're looking at are due end of February. So we'll say February 28th. So you may have to wait a few weeks, not too much longer. Good question. Now, my point about the independent consultant is this. So what's missing from this box is Social Security taxes. And recall that the employer also has to pay the same kind of tax that you pay, but out of their pocket, out of their money. So it's a payroll tax. So now, let's do the following. Let's have just a little discussion here. I know we got a big crowd now, but you tell me, if you're looking at paying somebody, would you rather pay them as a W-2 person, a wage earner, or would you rather pay them as an independent contractor? What would you rather do? If you pay them as a W-2, you have a payroll tax. So there's your answer. If you're an employer, but you're paying somebody as an independent contractor, hey, if I pay you as an independent contractor, I don't have a payroll tax. So my whole point of this, and we don't have a lot of time to get into every single nuance, but you need to listen to this very, very carefully. If this hasn't already happened to you, if you get a 1099 NEC as an independent contractor, you're going to pay both the Social Security side that you as an employee would pay and what the employer pays. You pay Social Security taxes twice. That may not be such a nice thing to have to do, particularly if you are not an independent contractor by definition of tax law. One more time. If you have to pay that Social Security tax and Medicare tax yourself twice, it's not pleasant, particularly if you really weren't an independent contractor. How do you know? Well, you might say, they had me sign an independent contractor agreement. That doesn't mean you're an independent contractor. This is the walk like a duck, walk like a duck, talk like a duck, quack like a duck, fly like a duck. That's the issue. Were you really independent? Because if you were, then independent contractor is okay. But if you weren't, you shouldn't have to bear the burden of paying both sides of that tax. And there are ways, we don't have the time here to go through it, but there are forms you can file with your tax return, which is another really important reason to prepare your return and maybe use somebody who's knowledgeable in doing so, which we're going to tell you how to get that done free. So use somebody who's knowledgeable so you don't pay both halves. There's a way to do it. One more thing to say, just so you'll know, the basic concept of what's the difference between independent contractor and employee. Let's go back to share slides so I can show you. Oops, there we go. Share screen. I'm going to get to that. Let's just do a basic little, take just one more second to go through. We should be on my screen now. The basic difference is control. How much control do they have over the way you do your work, when you do your work, how you do your work? That's the walk like a duck, talk like a duck, quack like a duck. So if it seems to you that you're more like an employee, then you may actually have an issue if they gave you that 1099 NEC. right there. If this is what they gave you, even if you signed a contract, the contract doesn't mean anything if you really are an employee based on the control. That's enough said, because we CPAs, we go to seminars on this, and those seminars take an hour or two to go through. We don't have time for it. But I did want to point it out. Watch out for this. If someone's saying here, you're going to be an independent contractor, maybe you need to send me an email. Let's find out. Okay.
Hey, just a second, Sam, excuse
Sure.
me. Do we have a question about being an independent contractor? I saw that someone had their hand raised. Okay,
They might have been trying to answer my question.
perhaps. All right.
Okay, do I still hear you?
Yeah, just go ahead, Sam. I guess you answered it.
Okay, good. We can always come back to it later.
Okay.
We'll have time. We will have time. Okay, moving along. More forms. One more form. Again, this should be 2020. Tuition statement. Now, here's where we have to stop also just for a brief instance to show you an important fact about the tuition statement, because it could affect your tax return for 2020. What you're going to need to do when you receive this from the university, again, these are all given to you by the payors. This is the person you pay the tuition to, the University of Maryland or any other school. And they're going to tell you in box 1 how much tuition you paid. It says related expenses, which means it's according to qualified expenses under the tax code that they received for your tuition, your supplies, and your fees. They will not show your books that you bought for yourself that weren't required by the school. It won't show supply, like the MacBook that you bought for yourself to help you at school. It won't show that, just the tuition fees and supplies that you pay to the school. Box 5, let's pay attention to box 5. That will also show your scholarships or grants. This is one of the most confusing areas and one of the most misunderstood areas of tax law. And I'm going to unconfuse you rather quickly, I hope. And that is that the difference between, we'll call this X and let's call this Y. The difference between those two numbers is an important component of whether you have taxable scholarship, fellowship, grants, or whatever you want to call it. Because everything that's called scholarship, fellowship, grant, stipend, it all goes on this form. It's all reported on this form. And the difference between X and Y will determine whether or not you have taxable stipend, fellowship, grant, scholarship, that kind of stuff, all those names. And the way you do it is you simply say, well, let's take Y minus X and see what we come up with. If we come up with a positive number, for example, if Y is 500 and my tuition is 300, I'm going to come up with a positive number of 200. That positive number indicates that you have potentially taxable income. And why do I say potentially? Because it depends on what you did with that 200. If you use that 200 for other qualified expenses, meaning books or supplies that don't show up in box 1, if you use that 200 for other things that the school or your classes required you to pay for, then it won't be taxable. But you're going to have to ask the question, what did I use this other 200 for? If you used it for room and board, or you used it for vacations or clothing or housing, which is room and board. If you used it for any of these other purposes, then this difference becomes taxable. And you're going to have to report that on your tax return as taxable. You may owe tax, you may still get a refund depending on how much has been withheld from your other sources of income. So don't be afraid, but do the right thing, since it stands right out on this 1098 tuition form, how much might be taxable. So you want to do the right thing. Any questions on that? We should make sure we have, let's see if we've got questions so far on the information thus presented. Otherwise, we'll go forward. Just want to check.
All right. Here's a question. Are we able to receive the W-2 virtually? I moved to Maryland this academic year, so I think mine was sent to my previous address.
Yes, you can. Yeah, virtual is fine. Just email, call your employer. say, please send it to me in an email. PDF format would be great, but you don't need to have it in paper form. You don't need to have any of these forms in paper form. The virtual world is fine.
All right, and one more question. Does everyone receive a tuition form?
Well, you're supposed to. If you paid tuition, you're supposed to receive that 1098T, but it's not universally well done by all schools, so you may have to call them up. You're responsible. This is, I see my finger up here. This is a point. You're responsible to keep track of your scholarship and tuitions to determine whether it's taxable or not. So even if you don't get a 1098T, you're supposed to make that computation yourself. What I've seen is most schools are compliant. Don't forget, this is not due out until February 28th. So they have a few more weeks to send it in the mail to you or send it to you online. And you can always go to the school if you didn't get it and say, hey, did you prepare one for me and I didn't get it? And I think they'll be glad to give it to you.
Okay, here's another question. I have a question about my W-2 for my UNDGA. I live in DC and have received wages in DC and Maryland this year. Do I need to submit tax paperwork to Maryland this year?
So they withheld both Maryland taxes and DC taxes on the W-2. They did both. Is that what happened?
Yeah, will you unmute yourself and
Yeah, thank you for taking my question. So they didn't take out any money for Maryland. So I think I don't file paperwork in Maryland, but I'm just unsure because part of my wages were from Maryland, but they didn't take out any taxes for Maryland.
Did you live in DC?
I lived in DC the whole time.
Okay, so there is something called reciprocity between states. I have a typical time saying that word. Reciprocity between states. And that means that even if you live in DC, but you work in Maryland, Maryland won't require you to pay tax. That's a reciprocity. I still have trouble with that word. Virginia also has that, and Pennsylvania has that with Maryland. Let's do one trivia. For your dinner tonight with your family and friends, there's one, you can explain reciprocity in a, sort of a awkward way, saying that states have an agreement so that people don't get confused on what line they live on, and they work on the other line, the other jurisdiction. I live in Maryland, but I work in Virginia. It happens all the time. So they have an agreement. They won't tax each other's residence for where they work. But there's one jurisdiction that has reciprocity with all 50 states. For a good reason, and that is
DC.
Washington, D.C. After all, everybody comes to work in D.C. from every state in the union, right? The government's there, so they have reciprocity everywhere.
Okay, great. So as long as no taxes were withheld in Maryland, I don't need to do anything in Maryland for my taxes.
You're fine.
Thank you so much.
No problem. Let's go back and cover a few other things, and then we'll come back for questions. So the 1098T, you're going to need that for the 2020 version. You're going to need that for your tax return. You'll also want to at least have the 2020 version of this if you've already started paying your student loans back. If you haven't started paying your student loan back, you won't have this, don't worry. But when you start paying it back, unbeknownst to you, there is some, or maybe beknownst to you, but you kind of try to forget about it, there is some interest that you pay when you pay back your student loan. The good news is this is a deduction. So we can say, yay, it is deductible. And that means you don't want to miss sight of getting one of these forms from the person or the organization you're paying your loan back to. They will send it to you. Again, it's not due out until February 28th. So it's a little early yet, and they prepare it. The person you paid it to, they prepare it, they'll send it to you, and they'll tell you exactly how much interest. It's a deduction, don't miss it. Okay, I'm not going to go through the form because I don't even know what each line is for. I just know what this is. We're going to talk about credits now, which is even better than deductions. And the particular credit we're talking about is your education credit, which will apply whether you're paying for undergraduate or graduate. There's credits for both. Let's see what they are in a quick nutshell, because the form will work you through it. So there's education tax credits for the tuition that you pay and qualifying expenses. If you want to know what qualifying expenses are, I'm going to tell you. Qualifying expenses. Here's how I answer what these are. What these are is go to irs.gov and look it up. That's how I answer that. Because I don't want to rely on memory. I want to see what the law says. So that's where you go. And you just put in qualifying education tax expenses, and you'll find it there. So whatever they are, they can be used for the famous tax credit, and they come in two varieties: the American Opportunity Tax Credit, which is lovingly in the accounting world called the AOTC, and there's the other one, which is the lifetime, which we'll get to in a second. AOTC applies if you're undergraduate, you haven't completed your first 4 years, and even if you're an undergraduate but you're in the 5th year, so if you're an undergraduate in year 5, this does not apply to you. So it's only the first 4 years, and that's okay. Thank you. Post-secondary education, as of the beginning of the year, that's how you calculate it out. The form will help you. The instructions of the form make sure you're in the first 4 years. So that's when it applies. You have to be in a program. Okay, that makes sense. It's got to be a degree program. It's got to be recognized as a college or university. You got to be working to something. Okay, and you only need to be in school 1 semester a year, and only half time for at least 1 semester. So it's not a lot. It's not a lot. So it's even half of 1 semester, which turns out to be a quarter of the year, the way you know it. That's all you need to be in order to use the tuition paid for purposes of finding out whether you're eligible for the credit. I think this was important because I didn't have to put this up. It's true. It's a true part of the law, but I thought it would be funny. Ha 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 ha. Okay. All right. Qualifying expenses, tuition required fees, books, supplies, and equipment. So that gives you a little bit more idea what qualifies. The eligible student is yourself, your spouse, or dependent, which means if you're looking at it from the other end, let's say let's say the dependent is you. So you have your parents up here. That's why you're going to need to find out with them who's doing what with the tuition expense, who's taking the credit. If you have no income, don't worry about it. If you have no taxable income, it's not going to be an issue. But if you do have taxable income, you're working, then maybe you want to find out what the story is. Because if you're listed as a dependent, then you can't take it. If this is you're the dependent, you can't take it. So in order for you to become to be able to take the credit, if you want to take the credit, if it makes sense, you have to tell your parents that you're not a dependent, and they have to do that on their tax return. We're getting to that. They have to undeclare you as a dependent, so to speak. They have to say you're not a dependent. All right, let's see if I have that. I think I should have that in another slide. I'll come back. Let's just see what the credit amounts to so you can get it. Let's get our feet wet on the money. What's the money mean? Show me the dollars. So the credit is 100% of 2,000, the first 2,000 of tuition or qualifying expenses. So it's 100% of that 2,000, and then 25% of the next 2,000. So if you spent $4,000, it would come out to $2,500, and that's the maximum. That's the max, as I think the next slide shows. So let's say you spent $5,000 on college tuition. I don't know anybody just spending $5,000 on college tuition. This slide was made about 700 years ago. The AOTC would give you 2,000 credit for the first 2,000. That's 100%, 25% of the next. 2,500 is the maximum amount. That's your credit. Yay, yay for credits. Your parents' income is not too high, they can use the credit on their return. If their income is too high and you made money, then maybe you can use the credit. All they have to do is on their tax return, not declare you as a dependent. So if you had credit, if you had a $750 tax bill for, let's say that was your tax and your credit was $2,500, just to show you what credits do, now your tax is zero because $2,500 minus $750 comes out to zero. You're left with $1,750. What happens with that? Good question. What happens with that is you can get 40% of the remainder or 40% of the $1,750 as a refund, as a money to you, even though you didn't have to pay tax or didn't pay tax. You can get that back. That's like That's like a subsidy. That's like a welfare payment, so to speak. I don't like to use the word welfare, but you know what I mean. It's free money. Unfortunately, it's not available to you if you can be claimed as a dependent. So it won't work for you, even if you do wind up having your parents. This gets complicated. Even if you do wind up telling your parents, don't declare me, you can't get this 40% back, but you can still reduce your taxes to zero if the $2,500 credit, if you get to that amount or whatever amount, to reduce your taxes zero. So it could still be worthwhile to you to have that conversation with your parents. Are they using any of the tuition for the credit? If not, see what it would do to your return. It's so simple for them not to declare you as a dependent, and then you can get it.
Excuse me, Sam.
Yes.
Just to clarify, is AOTC only for undergrads?
Only for the first 4 years, and you have to be an undergrad, correct?
Okay, so we've got all grads here today.
I know, I'm getting to the next one now.
Great, thanks.
Okay. Some of the information we learned on that one works for the next one. We're right there. There are income limits for both credits. So if your parents have too much income, they might not be able to take any of the credit. Let's see so here's when the student can declare the credit. This works for both the undergrad and the grads. You qualify as your own dependent by having the parents don't claim you. They can do that on their tax return easily enough, but you don't get a refundable portion. That's the difference. You still get credit for it, which is good. Still get credit. The lifetime learning credit for the grads. Okay, finally for the grads. I think I saw the hands that there's a couple undergrads, so we overdid it for them, but now we're getting to the grads. There is a lifetime learning credit, which is not refundable like the AOTC, but you can still reduce your taxes. And here's how it works. This is good because I don't care how long you stay in school, it's still a tax credit. So if you want to be a lifetime learner, this is for you. No matter how many years you're in school, you can offset the cost of any type, even if you're undergraduate, if you've been past 4 years. So past 4 years, even if you're undergraduate, you can still use this credit. And of course, it works for graduate or professional degree, like veterinarian school, dental school, law school, etc. It's 20% of the first 10,000 of tuition. That's the maximum. So you can see it comes out to $2,000. That's the maximum. But if you have a tax bill of $1,700, now you have a zero. If you paid $2,000, if you paid $10,000 of qualified tuition, even for the lifetime learning credit. Tuition and fees, if you're not eligible for the credit for whatever reason, or it's not eligible, but if the credit is not reducing your taxes by as much as a deduction will reduce it, the software will figure out you're also eligible to take as a deduction. We don't need to talk about that. That's esoteric. The software makes the determination. I'm just pointing out that if anybody tells you that the tuition is only eligible for a credit, no, it's still eligible in 2020 for a deduction. That's all I'm telling you. It's good through 2020. All right. You can't get double benefits, meaning if your tuition comes from a tax-free source, you can't use that for a credit. What's a tax-free source? A 529 plan. Maybe your parents set you up in a Section 529 plan, and you're getting money from that plan. So that you can't use that money to determine if you can be eligible for credit. It's not you can't use it. So if it's from some tax-free source, which is what a 529 plan is, you can't use it. By the way, when you start working, 529, putting money in a 529 plan is a good idea. Of course, you want to have children to put it in for, so that may wait a year or two. Okay. Student loan interest is deductible. Yay. When you pay that back, here's how you'll know. Pretend this is 2020. If you've already started paying back your student loan, you will be paying it to the payor, to the lender. The lender will send you this document, this is a 1098E, almost the same 1099 idea, but the lender will send you this and they'll tell you how much was interest you paid that year. That is deductible up to $2,500 per year. So that's a yay. Not bad, not bad. It means you at least get some tax break when you pay your interest back on student loans. All right, so what does this all mean? Let's summarize and then we can take some questions. What this all means is the following. It means that you need to think about the tax papers you get, your dependency status. Are you paying tuition? Do you have scholarships? Is it taxable? Any of it taxable or not? You need to think about all that. You probably need to prepare a tax return, which is always a good idea if you have any kind of income. And then you need to think about this, which is TURP tax. Because TURP tax is free. Yay. And TURP tax is right here at on our campus. That's an R, by the way. Let me get that straight. This should be TRP, just like, well, you know how to spell TURP. TERPTAXUMD. Don't forget the UMD.org. Look us up on the web. We got a brand new website. We are free. It's volunteers at the Smith School of Business doing tax returns. We can do it all for you. We can do your federal return. We can do your state return. We can help you figure out, do you have scholarship that's taxable? Do you not have scholarship that's taxable? We can also help you if you've been mistreated, misclassified as an independent contractor. We have ways of helping you. We can give you the information on what you need to do about that so you don't pay extra taxes. So all the mystery can be solved with TURP tax. What's good about what we've learned today is now you understand what you're going to be doing. You'll have a better understanding of the questions that need to be raised and discussed. And now we can take questions from all of the wonderful students that are here. And I might have some questions that were sent in early. Let's see if I can find those. Do you have any questions on there on the chat box, Debbie?
I do. Sorry about the delay.
No problem.
Okay, first question. I live in Pennsylvania, but worked virtually as a GA in Maryland throughout 2020. State and local taxes were withheld for Maryland. What should I do since I was a PA resident in 2020?
Oh, okay. That's interesting. So in that case, you will file a Maryland tax return just to compute as a non-resident. You didn't live in Maryland, if I understand correctly. You didn't live in Maryland. You'll file a Maryland non-resident return. You'll figure out how much tax you actually owe Maryland, and maybe you'll get some back, maybe you don't. Whatever it comes out to, then you'll use whatever you had to pay to Maryland on your Pennsylvania return to get a credit on the Pennsylvania side. So when you file as a Pennsylvania resident, you'll include all the income and it'll look like, oh, I'm going to pay twice. No, that can't be. It's right. It can't be. It doesn't happen in America. You'll get a credit for what you paid to Maryland on your Pennsylvania, and you won't pay double tax. That's how it's going to work. But you're going to have to file 2 returns because you're a resident of Pennsylvania, 2 state tax returns.
Okay, sounds good. Thank you. Are scholarships and fellowships tax-free sources? Can we qualify for the tax credit if tuition is covered by fellowship?
So that's a good question. Let's do it in order it's been asked. First of all, scholarships and fellowships, as I was describing on that 1098T, if the amount of scholarships is greater than your tuition and you use that money for room, board, clothing, etc., you are going to have taxable scholarship, fellowship, stipend, whatever you want to call it. It will be taxable because you can only use as non-taxable the amount paid for tuition and qualifying expenses. That's the only amount that doesn't have to be paid tax on. The second part of the question was, what was the second part of the question?
Just a second.
Uh,
Can we qualify for the tax credit if tuition is covered by fellowship?
And the answer is no. And that's a great question to apply the principle that we learned today. So with all due respect, let's show how the principle works. Remember I said from tax-free sources, you can't claim the credit, can't double up, you can't have a double benefit, you can't get it from tax-free and also use it towards the credit. So those scholarships cover tuition. Now, here's a good point. Let's just use the share screen real fast to illustrate it in a way that I think will benefit everybody. Let's take a look at this. Watch this. Watch me pull a rabbit out of my hat. Well, maybe not out of my hat, but watch this. Suppose you have scholarship. We'll call it SCO, scholar. We'll do it that way. You have scholarships. Let's call it $1,000. And your tuition is $2,000. So now eligible for your tax credit is the difference, because obviously $1,000 you paid out of your own pocket. This is you. So that's eligible for the credit, but only $1,000 because this is from a tax-free source, because you're not paying tax on it. You're not paying tax on it. So that's how that works. I hope that clears it up. I will admit tax law isn't exactly immediately logical. It's logical to me, but I've been doing it for a while. Any other? All right, next one to hit parade there.
All right. I have a specific question about the lifetime learner. I paid my full tuition last year and so qualify for a large credit, but my employer reimburses me tax-free $5,250. However, I didn't actually get that reimbursement until 2021, so it isn't noted anywhere on my 2020 documents. Is there a way I should claim that in 2020 or wait until 2021 to report the reimbursement?
Wow.
Yeah, do you want me to read that again?
No, I got it. In other words, what they did is, and they can unmute if they want, but what they did is they inadvertently, that's how we like to say things, because doing it deliberately is tax fraud. So we don't want to say that. So we inadvertently claimed a credit on tax-free money. And that was the $5,250. And so now you're looking at, you could amend 2020, or you could amend the prior year where you took the credit, or you could declare the income in the year when you got the income, or, and well, this is off the record, we'll stop the recording, or you could do nothing. That's, I'm not sure. I mean, that's a different discussion to have with your tax preparer, your CPA. But that's a great question, because again, it illustrates you got to look to the source of where you're getting your money. If it's tax-free, you're not supposed to double dip, not supposed to get that double benefit. I'll be glad to entertain that question offline after we're done if you want.
All right, thank you, Sam. Okay, next question. Who do you recommend for filing taxes? I usually use TurboTax, but it wants to charge for the lifetime learning credit.
Okay, so I would recommend, bingo. How come I don't have the right screen? 1 second, there we go. I'd recommend TurboTax. You have to understand one thing. Let me just explain. TurboTaxUMD.org. Let me explain something here. Very important for you to hear. You are doing the business school a favor by using TurboTax. We have 70 or 80 volunteers standing by right now, operators standing by ready to answer your call. Now you go online, you make an appointment online, but you're giving them valuable experience. So even if you have a very simple return, by you going there, they're going to, I don't know if they'll bless you, but they'll be very happy to have you as one of their clientele. They don't get paid, they're volunteers, but they're getting great experience that they put on their resume. It looks like a semi-internship. Some of them are getting school credit for it. So don't feel bad. Don't scream and yell at them, but don't feel bad about going there for your tax return. TurboTax is great, but if they're going to charge you, you're right here in our school. We're all together. We're all family. Feel free to use this.
All right, thank you.
Okay.
Good suggestion. Next question. What is needed from me on a 1095B health coverage form?
Oh, not much. There's no penalty anymore. I quite honestly, when they got rid of the penalty for not having healthcare or having healthcare, I sort of put it out of my mind. There's only one issue, and that is if you're getting your health insurance through the exchange, the health exchange in your state. And if you're doing that, Debbie, this is the first time in 2 or 3 hours today, I have to say, I don't know. It's one of these areas that is so complicated. I just decided this one I'm not getting into. But if you're only if you're using the exchange for your health insurance will become an issue.
You know what, Sam? It's okay. I would rather you say, I don't know, than make something up. So good for you.
Well, I usually do make it up, but I'm telling you this time I didn't.
Can family members use TurpTax, or is it only for students?
Oh, so it is open for family members of students if they qualify by having sort of within our income limits. Our income limits are around $57,000 in total for the individual taxpayer. After that, we really can't do that. It's a little more, gets more complicated the higher up the income goes. So we go to that limit. But for family members of students and faculty and staff, we would be happy to have you register online.
All right, new question. Sam, are Roth IRA contributions deductible?
Oh, that's a great question. If you have W-2 from your GA or TA, if you have that, taking advantage of an IRA, individual retirement account, is a great idea to do if you can afford to do it at this stage of your life. They come in 2 varieties. Let's do a share screen on this. We can spend a few extra minutes here. Let's do a share screen so I can illustrate. This is really important, and I didn't put it in our agenda, but I should have. If you have W-2 wages up to, let's say, 6,000, anything up to that amount, then you qualify for, and you can do 0 to 6,000, 0 to 6,000 of IRA. And I got to read, say, individual retirement account. Two flavors: A, deductible, which is a yay. B is what's called a Roth. A Roth is not deductible, which at first blanch says boo, except when you retire, the Roth is not taxable when you retire. That's a yay. And when you retire with this, it is taxable. So that let's summarize it one more time, and I'll go back to looking at everybody and give you my synopsis of this. If you have to have earnings in order to advantage yourself of an individual retirement account. You have to have earnings. If you have anywhere from 0 to 6,000 of earnings, you can use up to the maximum amount for 2020 a deduction or a contribution, let's call it a contribution to an IRA. You can contribute either in a deductible fashion, which reduces taxes now, or you can do it in a non-deductible fashion, which doesn't reduce tax now, but you don't pay tax when you retire on the growth of that income. So that leaves a dilemma of which one do you choose? First of all, before we get to the dilemma, you should always try to save as early as you can. At your age, that money will compound to huge amounts by the time you retire at age 85. Did he say 85? Well, you know, some age much later. Whether you take the deductible individual retirement account IRA or the Roth, which is not deductible, is a really tough choice to make. Most people today, your age and your generation, are doing the Roth because they don't want to pay taxes later on. So that may make good sense. However, I have a contrarian viewpoint. My contrarian viewpoint is if you're age 22 and you're not going to retire till, let's say, age 72, that's 50 years. That's a long time. Who knows what our tax law will be like in 50 years? Who knows where you'll be living? So I don't know. I like the deduction currently. I like saving taxes currently. However, if you're not going to save a lot of taxes currently, if it's 0, then the Roth becomes a no-brainer. So you have to just look to see what your situation is. How much will it save you for putting $1 of taxes in for that deduction? TurpTax or any preparer or any software system can help you weigh the difference between yes or no, deductible or not deductible.
All right, got it. All right, last question, because it's 2 o'clock. This is a quick one. Is there an income tax, an income cap for using TurpTax?
Yes, as I said before, somewhere around 57,000, 58,000. We really can't go too far above that limit. We stretch it depending on the circumstances. If it's an easy return, we'll stretch a little bit. But we are sponsored by the Internal Revenue Service. They oversee what we do. All the volunteers are certified under the IRS and as tax preparers, at least to the extent that they can do these returns. And so there's only so much that we can take on as responsibility.
All right, understood. Well, it's 2:00, so we need to wrap this up. Sam, can't thank you enough for joining us again. You've done this for years now. And just between these workshops and Turp Tax, countless students have like not lost their minds over doing their taxes. So thank you for that bit of sanity. You're a great resource.
Well, thank you very much.
and
And you will have to have me back next year because for sure tax law will change between now and then.
Really?
That's made my career.
Yeah, good for you. Well, thank you everyone, and thank you to all the students that joined us today. We appreciate you being here live, but we will share the recording, the slides, and I hope to see you next week. Our workshop is what do I need to know before signing a job contract? So until then, have a great week, stay warm, stay dry, and take care. Bye.
Okay.